Oh my goodness, ladies and gentlemen, the stock market is not looking good. As you guys can see, take a look. I'm sweating my you-know-what off. I just got back from the gym. No time to shower. We got to make this video and talk about the bloodbath that we witnessed today. We have to break down some stocks, earnings, the markets in general. So hit the like button, subscribe. Make sure to get your 5 stocks from Moo. Link down below. Literally free money, guys. All you have to do is use my link, deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Again, free money. Link down below. And now let's talk about the bloodbath. So we can see here, SPY ended up closing down 1.8%. We had the NASDAQ down 2.6%, Russell down 1.8%, and we had the Dow down about 1.4% as the VIX went up almost 8% on the day, and we had gold up 0.1% and silver up over 1%. And since my previous video a couple of hours prior to you watching this video, right? Since that video, the markets went down even more. You guys can see here, SPY completely fell through the floor. The sell-off started to accelerate at about 2 p.m., roughly 2 p.m. on the East Coast, and we clearly went under 425, and we hit a fresh low. We went down to about 421 at close, and that's not good, considering on this 4-hour chart, you guys can clearly see 425 was support for a couple of months. So now that we broke under it, we're at 421, obviously under 425, right? We are at a fresh multi-month low, and if I pull up the yearly chart, it looks like this thing wants to go down to 415 now, which was support back in the middle of June. And if that were to break, we're probably going to be going down low 400s in the short term here, which were the lows from the middle of May. And if that point were to break, gosh, guys, we're going 390s, and that could easily happen. I mean, nothing is off the table at this point in time, especially as each day that goes by, we're getting closer and closer to the Fed meeting in March, which you guys know, we're going to get our first rate hike most likely in March, and we have the tapering, right? The bond purchases, they're going to be donezo, zero, no more bond purchases in March. You know, tapering, it's still going on, and it's, the bond purchases, they're expected to end very soon here. So a lot's going on in the markets. Obviously, we have Russia, Ukraine, a lot of fear around that, uncertainty, and just everything going on. You guys know this is a recipe for the markets to go down. And now that SPY just hit 421, it is officially down 12% from all-time high. So we're officially now in correction territory. And you guys know 20% plus of a drop is bear market territory. We're not really close to that yet, but who knows? We could be getting there pretty soon here. I mean, if things get uglier, right? And Triple Q, take a look. Triple Q hit a fresh low. I think yesterday we hit 332, and today we hit 328. We took the lows out. Now Triple Q is trading at a multi-month low, and if you guys take a look here on the yearly chart, the fact that we broke under 335 and under 330, that means we're on a one-stop shop pretty much to the next support level, which is at about 315. And I have a hunch, I have a feeling that's where we're going. And I've been talking about that here on my YouTube channel for a couple of days. I mean, this is not the first time I've mentioned this. You guys can clearly see, I mean, we took the floor out. We're on our next leg down, and I've been thinking, markets obviously don't go up in a straight line, down in a straight line, so I feel like we might be able to play the rebound on Triple Q and SPY for that matter. If we do get another leg down, maybe to the low 320s on Triple Q, it's going to bounce back in the short term. We're probably going to see a relief rally. So I've been thinking maybe TQQQ could be a play here. I'm not saying tomorrow, the next day, but if it gets very oversold, right? If we get another leg down tomorrow, TQQQ might be a play, and this goes up whenever the NASDAQ goes up. It's a leveraged ETF, and we might take a look at SPXL, which goes up whenever the S&P goes up, right? That's going to be an option. You guys can see last time we got very oversold in the markets, SPXL went from $100. This was in the end of January, about a month ago, and went up from 100 to about 130, right? So let's say we go down to $90, 95. for it to go back to 105, 110, 115, that's not too far-fetched. So that could be a trading opportunity in the short term. And TQQQ, let's pop that up again. You know, last time we had a relief rally, this went from $50 to about $67, which was a big move. Now we took the lows out from a couple of weeks ago. Let's say we go to $40 on TQQQ. Could it bounce back to about 45, 50, 55? Absolutely, if we get that relief rally. So that's kind of what I'm looking at here. Guys, let me know your thoughts down below in the comments. Hit the like button, subscribe, get your 5 stocks for Mumu if you haven't done that already. That's linked down below. Literally free money, guys. And let's talk about some earnings, some companies that we haven't talked about much here recently. Lowe's we actually did. I mean, Lowe's we talked about with Home Depot yesterday. Home Depot reported that stock got destroyed, and I think today Home Depot went down again. Yeah, it went down 2.4% today on top of the 8% red day it had yesterday. So now Home Depot is well in a bear market. It's down 27%. But in this video, we got to focus on Lowe's. Ticker symbol LOW. This one, we see a clear-cut head and shoulders. I've been talking about that on the channel for a couple of weeks here and there. We've mentioned it, right? And it looks like it's playing out. We had earnings this morning. Let me pop it up and read it out here for you guys. They did Q4 EPS of $1.78 versus $1.70, sales of $21.34 billion versus $20.87 billion. So nice double beat for Lowe's. And let's see here, guidance, they raised their guidance, and we can see here, I think they raised their dividend. Maybe I'm wrong on that. Let's see here. I hope they raised their dividend for all you dividend investors out there. But overall, they double beat, raised guidance, and the stock went up 0.25% on the day, and it was actually up even more earlier. If you guys take a look here, it was at 227. It was actually up 5-6% on the day at that point. And then we lost about $12 of ground throughout the day from 227 down to about 215, which is where this stock ended up closing. So for Lowe's here, I'm not looking to play it because, again, we're in a head and shoulders. This could probably go down to low 200s, 200, 205. If it did do that, I would not be surprised. So I'm going to be a bit cautious with Lowe's here. But if it does get oversold, guys, hey, if we go to 190, 195, 200, it's probably going to see a relief rally. It probably will see a relief rally. So let's take a look at eBay. eBay reported, I didn't look at their earnings, but gosh, by the price action, after hours, it is not looking good. eBay on the day closed at about $54, down 1%, and it looks like it just hit $47 in the after-hour session, meaning it initially dropped 12% after earnings. Now we're rebounding to about $50, so we are bouncing off the lows. But overall, after hours, it is still down. So let's see what they ended up doing. They did $1.05 EPS versus $1 estimate, so they beat EPS, and they did sales of $2.613 billion versus $2.61 billion, so pretty much in line with the estimates for sales. EPS barely beat, but it still beat, and we have a quarterly dividend. It's got raised from 18 cents to 22 cents, pretty solid, not too shabby, and we have eBay seeing full year 22 sales of about 10.3 to 10.5 billion. Full year adjusted EPS of $4.20 to about $4.40. So not too bad there for eBay. I'm not sure why the stock is falling. It says here, I guess that was the guidance, sales guidance was below the estimate, but I'm not really seeing the estimate here. But I'll take, what is that, Benzinga? I'll take their word for it, guys. Yeah, you know, the sales guidance is not that great. And based on the chart here on the 4-hour chart, eBay is down a ton. I mean, this stock was $81 back in October, just 4 months ago, and now it's sitting down 40% from that point. It just hit $47, guys, well into a bear market. So at this point, if eBay does sell off 45, low 40s, it's going to be way too oversold. Probably it's going to be in that category of a relief rally stock, like the overall markets, like I said. You know, if Triple Q SPY, if these drag down a little bit more, we see a leg down again tomorrow, the next day, maybe next week, we're going to get that relief rally. That's how markets work. And at that point, eBay will probably start to rally again. We have to wait and see what ends up happening there. So eBay, not too great. Not too great right now. It's a falling knife. I'd be careful with that one. Lemonade also reported earnings. Lemonade is one of those stocks that got very frothy, very overvalued, and now it's tanking even more. Holy crap, guys. This stock went down 6.4% on the day, closed at $23 a share. And now after market hours, it's at $18. Oh my gosh, that's not good. Or it hit a low of 18. Now it's trading at 19, but still, it is down 20%. Oh my gosh, it's down 20% after market hours. And this is one of those stocks that was hyped up a lot by a lot of YouTubers. Not going to name names here, but you guys probably know who I'm talking about. And it's just been devastated, guys. I mean, from $188 a share just a year ago, now we just hit $18. I mean, come on. That's got to be a 90% drop. It is literally 90%. These are .com level, bubble level crashes. I mean, you guys remember the .com bubble if you've studied it. A lot of those stocks, pre-revenue companies, they didn't make money. They went down 90, 95%. A lot of them went out of business. We're seeing a repeat in history. It's not the same thing. Because a lot of those companies were pre-revenue. There were a lot of BS companies back then. But we're seeing it today with some of these companies. Similar things playing out. You know, a lot of these SPACs that came on during the hype of the pandemic, and then they ran up like crazy. Now they're down 90%. A lot of those are very similar and remind me of the .com bubble. Lemonade, I'm not sure. Was this a SPAC? I forget. It probably was a SPAC. But Lemonade's in that category where it's just been devastated. And actually, I don't think Lemonade was a SPAC now that I'm thinking about it, because it looks like it went public about a year and a half ago at about $55 a share. And you guys know SPACs are usually $10 when they're listed. We're not going to get into that. But Lemonade is getting devastated right now, down 90%. So let's see what they ended up doing. Lost about $1.14 for Q4, and they only made $41 million in revenue. I mean, this is a way smaller company than I thought. They only made $41 million in revenue. What? Is that really it? And that just goes to show how overvalued this company was. How the heck was it a $180 stock when they're only making $50 million in a quarter on revenue? And the market cap now is $1.5 billion. Back then, it was probably like 15, 20 billion. And then they're only making $50 million on the top line a quarter, which is nuts. And it seems like their guidance is a bit under the estimate for Q1 and for full year 22 for sales. So that is definitely why the stock is getting just cremated right now. Cremated. You guys like that one? So yeah, Lemonade is getting destroyed. And I was looking at my phone the other day. It was today actually. And I saw Workhorse on my watch list. This is another funny one. Workhorse is now a penny stock. It's $2.80. And this stock was $43. So you guys got to be careful with these speculative names. I mean, these stocks could go to zero and they can drop 80-90%. Workhorse is down 93%. I mean, this is just insane, guys. You know, that's unbelievable. So be careful. Lemonade, be careful with it. Workhorse is a whole different beast. I wouldn't even touch that thing with a 5,000-foot pole. There's no freaking chance. And let's talk about Hertz. I forget the ticker on this one, but let's see if we can actually pull it up. Hertz, what is it here? I know it has a weird ticker symbol. Those are the warrants. We don't want the warrants. Where is it? Hertz Global Holding, Inc. Is it this? Give me a second, guys. I'll pop it up. Let me see. I'll multitask here. Give me a second. Make sure to smash the like button if you guys are finding value in this video. It doesn't seem like this wants to load, so I doubt this is even it. But let's see. Is it HTZ? Yes. Yep, there it is. HTZ is Hertz, and they reported earnings. Let's see what they ended up doing. $1.9 billion in revenue. They lost about $260 million. They lost about $1.52 per share, and they did 91 cents versus the 70. Wait a second. They did 91 cents versus 76 cents estimated. Sales missed 1.95 to about 1.98. So ignore what I just said. It looks like they did beat the EPS, and they missed sales barely. So Hertz is going to be one worth watching. And I probably wouldn't touch it until it starts breaking, if it starts breaking, back over $20 a share. So I'm going to put my alert mark is at or above 20. That's right around the moving averages, and quite honestly, I'd want to see it above $22 a share. If that's where Hertz starts to move, that's going to be a very good sign, 22, 23 a share. But until then, it's downtrending. We just hit a lower low. I would be careful with this one. We also had another pandemic favorite, FuboTV, FuboTV. They reported earnings just today after hours. They did $231 million versus $213 million estimated, so they beat revenue. That's nice. And they see Q1 revenue of $232 to $237 million versus $237.83 million, so a little bit under the full year, or rather the Q1 sales guidance. And full year 22 guidance is right in line with the estimate at about $1.09 billion. And you guys can see this stock is also one of those, like Workhorse, like Lemonade, that has just gotten devastated. This stock is down about probably 70%. Actually, no, 86%. Even worse. It is down almost 90% from the all-time highs, and it doesn't look like it wants to reverse. You know, this is going to have to start breaking out of $12, $13 a share for it to even reverse. So I'm going to put my alert at mark. Mark is at or above $12 a share. Another one that reported is Skills, which is also a penny stock now, guys. This is another reason why you shouldn't be too heavy. As I knock over my microphone, you shouldn't be too heavy in these speculative names, because if you bought this at $46, $40, $30 in peak mania back in 21, early 21, you would be down about 92%. The stock is down 92%. Not to bag on Cathie Wood, but she pretty much owned all these stocks. I think she owned Skills. I think she owned Workhorse. She probably owned Lemonade as well. So she owned a lot of these stocks that are just in the toilet right now. And I'm not trying to bag on her. I don't like doing that. But, I mean, come on. These stocks, they freaking suck at the end of the day. But their performance, they freaking suck. Because at the end of the day, they're pretty speculative. They're unprofitable. And in this environment where interest rates are going up, these companies aren't profitable. It's just a recipe for disaster. Let's just be honest with ourselves here. So Skills, let's see what they ended up doing. I don't even think I mentioned it. They lost 25 cents a share. They how much revenue? $108 million in revenue for Q4. They see revenue of, actually that's full year 22. They see full year 22 revenue of $400 million. That's got to be under estimates. Yeah, that is under the street estimate. The stock's getting bashed, guys. It closed at $3.60. Now we're trading at $2.50. This thing is down 30%. I mean, you got to be careful, and you got to realize if you're in a stock at $8 a share, for example, or $10, let's do easy math. If you're in at $10 and the stock cuts in half, it goes down 50%. It goes to $5. You're going to have to see that stock 100%. Or rather double for you to even recoup your money. So a lot of people might think, I bought a stock at $10, it goes down to $5, I lost 50%. I have to make 50% now for it to go back to break even. Wrong. If it went from $10 to $5, you lost 50%, you're going to have to double up to even get back to even. So that's the risk with buying these speculative stocks, because they could just keep going down and you're in the toilet. You're going to keep buying. You're going to try and buy more and more and more, and you're just investing in a dying company. And I don't want to sound like an a-hole or a perma bear. I'm just speaking the facts, guys. I'm keeping it real. That's what I'm doing here on this channel. So that's Skills, and let's pop another one up. Let's keep on going. Clover. Clover is now a penny stock. Penny stock. This was $28 a share. Now it's at $1.90. I mean, come on. This stuff is insane. You can't make this up. You just can't make this up. The stock is down 93%. And believe it or not, it's up after hours. Holla freaking Lulia, right? If you're a Clover Health investments investor, which I'm not, but if you are, you're looking pretty good right now, especially if you bought today. The stock is up 40% after hours. So let's see what they ended up doing. They did, let's see here. They lost probably a good chunk of money. They did revenue of $432 million. They probably lost, let's see here. I'm not really seeing it. Yeah, I'm just saying they lost money. They lost $187 million. Yep, there it is. Lost $187 million. They expect full year 22 revenue of about $3 to $3.4 billion. That's probably above the estimate. That's why the stock is ripping. And this has got to be a stock that's heavily shorted. I mean, I haven't looked at the statistics behind it, but it's got to be. It's freaking got to be because this it kind of looks like a short squeeze. The stock being up 40% after market hours, and it seems like it wants to keep on going by the looks of it, guys. So overall, we talked about a lot of companies in this video. Really only two of them I think are quality, Lowe's and eBay, and the other five kind of show, and I mean, we cover them because they reported earnings, but these other five, they show how you got to be careful with investing in speculative stocks, especially during hype cycles, hype periods, because you can see these go down a huge amount. And if you're over allocated in stocks like that, the last five we talked about, you could be devastated. You could lose a lot of your money, and you might be discouraged from ever investing in the stock market again. So for that reason, I personally invest most of my money in blue chip stocks and ETFs. And if I want to invest with, some play money, I buy stocks like these, right? And I don't own any of them, but if I wanted to speculate, if I want to speculate, I do it with a small amount of my money. Just for food for thought, guys. So I'm going to wrap the video up here. If you all enjoyed it, hit the like button, subscribe, drop me a comment, and make sure to join my Patreon if you guys want all my buy, sells, call outs, morning update videos. All of that is linked down below on Patreon. And you guys could also get your 5 stocks from Moomoo, literally free money. Use my link down below, deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Get your money down below. I'll catch you guys in the next video. Peace out.